All right, guys and girls, what is happening? Johnny here. So this lesson is going to be about the relative strength index. We have touched on this a little bit through the previous two chapters, but we really haven't talked about how to use it, where to find it, and what exactly it's telling. Well, we have talked about what it's telling you, but we have not really talked about how to use it. So what is the RSI? Just to review, it's a momentum indicator used in TA that measures the magnitude of recent price changes to evaluate overbought and oversold conditions in the price of a stock or other asset or crypto. Now, the RSI is displayed as an oscillator, meaning it's a line graph that moves between two extremes. These extremes are 0 to 100. It was originally developed by an old dude named J. Wells Wilder Jr., and he introduced the RSI in his 1978 book, New Concepts in Technical Trading Systems. The RSI was designed to indicate overbought and oversold conditions. It's calculated using average price gains and losses over a given period of time. This given period of time will be your look back. The default look back period is 14 periods with values bounded from 0 to 100. Okay, so anything under 30 will be considered oversold. Anything over 70 will be considered overbought. So first thing you're going to want to do here is go to your Tradingview chart. You're going to click on the old F of X here. We're on the daily chart, mind you, and we're going to type in relative, and it should be the first one that pops up, and boom, there it is, relative strength index. Now you can click on this little star that will add it to your favorites. So here is what the RSI looks like. Now it comes in this default setting here. Double click on the indicator, it'll bring up this little menu. You can also click on the little gear that will also bring up this little menu, and this is basically where you can customize and set the data metrics for the RSI. So as we just mentioned, the default look back period, which is called also length, is set to 14. So that means the RSI, the current RSI data, will be using the price metrics from the previous 14 days. So our typical look back period is 14, and our typical overbought and oversold areas are 70 and 30. Now, when we are in a strongly trending bull market, one thing I'm going to recommend, and this is a little tip, you do not have to do this by any means, but it may help if you're using the RSI pretty solely to help forecast or predict price action. What you will do is you're going to want to change your length. I like to change that to 8. Now, what we will get into later in the course, I use Fibonacci numbers for just about everything. Now, there's no real rhyme or reason to doing that. I just find more relationships between price action and Fibonacci levels numbers than I can really with anything else. And it helps me understand where price may be going or not going in short and long terms. So in the strong trending bull market, especially if you're trading Bitcoin. Now, if you're using this on altcoins, I would not recommend changing any of these settings unless it is in a very strongly trending bull market like Ethereum. So you could change these settings for doing technical analysis on Ethereum. It may help give you more accurate readings. Okay, so we're going to keep our time frame at same as chart. I highly recommend you only the lowest time frame you go on is the 8 or 4 hour. I highly recommend, especially as you are just starting out, to stay on the daily time frame. Whether you're trading crypto or stocks, really doesn't matter. Okay, so we're going to change our look back period to 8 from 14. So it's going to shorten the amount of candles or days on the daily chart that the RSI reading will look back for. We're going to go to style. Now, one thing I like to do, I do like the color purple, but it's hard to read because I keep a dark template setting for Tradingview. So I change this to white, and I'll either take it on the second level of thickness or keep it on the first, but for this lesson, we'll keep it on the second. Now, you can have this background to help you determine when price is actually in the overbought or oversold areas. And it helps. It definitely helps, especially when you're looking at quick glances. So Okay, strongly trending bull market. We've changed our look back period to 8. We've shortened that. Why? The same reason we use exponential moving averages in a strongly trending market, whether that's up or down, because it gives you more accurate data for recent price action. Okay, so we're moving up, and because we've been moving up so fast, if we use a longer look back period, it may smooth our reading out too far, and we may get inaccurate or false signals. Another thing that I really like to do in a bull market, especially a Bitcoin bull market, this has proven very successful for me, is I like to change my upper band, which will be my overbought area, to 80. And I keep my lower band here at 30. Okay. Now, the reason I changed my overbought is because, as we've discussed in the previous lesson, not the previous lesson, but as we've discussed in chapter 2, when we did briefly go over the RSI, in a strongly trending bull market, it's not uncommon to see the RSI value stay pinned above 80 for a significant amount of time. So we are good to go there. We'll just click OK, and our settings are saved. All right. So, for example, now I just wanted to show you a quick example of what I mean by when the market is in a strong trend, that the RSI can stay pinned at a certain level. So in this case, we're saying Bitcoin is in a very strong bull trend, meaning it's going up. The market's very bullish. So it's not uncommon to see an RSI pinned in the overbought level as the price continues to move to the upside, giving you a ton of false signals that a correction may be imminent, right? And we can see this on higher time frames as well. If we go to the weekly chart, you can see that ever since October 26th, Bitcoin has technically been overbought. Now, if we bring this down to 70, we say that the Bitcoin price has been overbought since the 12th of October. So it's been, if we smooth our settings out to 80, it gives us a more accurate overbought reading, letting us know that the market is still moving to the upside. So it's been overbought here for quite a bit of time. As you can see, it's remained in the high 80s, low 90s, basically since when did it cross over here? The 19th of October till now, 25th of January. Okay, so this is what the RSI looks like. Now, how are you going to use this bad boy? So we already talked about the idea of overbought and oversold. So when the RSI is in this overbought area up here, you're typically going to be looking for pullbacks or possibly trend reversals. Now, when the RSI is down below 30, that means it's oversold. That means you're going to be looking at potential entries into the market. So let's just back test this idea really quick. So we came down here, we were approaching oversold, right? So we were down here, an RSI reading of 32, just above the official oversold level. And this obviously, may be a great time to get into the market right now because the RSI will be going to the upside. So as we approach overbought levels, typically the price is rising in a strongly trending market. And if we back test this a little bit, you can see here, this would have been a great time to enter into the market. And as such, this would have been a great time as well. But, we got the fake out and a double bottom here before moving to the upside. Now, going back a little further, completely oversold. And this would have been an amazing time, probably the best time to buy in during this entire bull market. And it's very clear, plain as day, here on the RSI, that would have been a great time to buy. Conversely, here you can see the RSI was in the overbought level, and this would be telling us that a potential trend change or pullback is likely. And then we see the RSI start to fall to the downside, and we see price continuing to rise to the upside. That is letting us know that we may be forming a potential bearish divergence, or this RSI is basically just looking bearish. So if the RSI is falling and price is rising, it's a very strong indicator that we may be due for a pullback in the very near future. And sure enough, we did get the pullback. Now, it might be a bit confusing, but the pullback did come on the highest reading of the RSI in this area of time here. So, it can be a bit tricky to read. This is not an indicator that gives you concrete buy or sell signals. There is some interpretation that you must learn on your own. Okay, so if you look at this chart here on the handout, as you can see, the RSI indicator can stay overbought in this region for extended periods of time. We just talked about that. Also, the indicator may also remain in the oversold territory for an extended amount of time when the crypto stock, whatever it is you're trading, is in a strong downtrend or bear market. Now, this can be pretty confusing for new analysts, but the concept, the basics of the concept is really the same. All right, so moving on. What does the RSI tell you? We just went over that. And here is something that's extremely important to have a solid grasp of, especially when you're trying to find great entry and exit prices for whatever it is you're trading. Now, if you look at this chart, you can see that bullish divergence was identified when the RSI formed higher lows as the price formed lower lows. This is a valid signal, but divergences can be rare when a crypto or a stock is in a stable long-term trend. Using flexible oversold or overbought readings will help you identify more potential signals. That was one of the very first things we went over in this lesson, is adjusting your look back period and your overbought and oversold areas for this strongly trending bull market. Okay, so to find a bullish divergence, I had to go back into the price chart data to find, some price action that really kind of lets you know what exactly this bullish divergence really does look like, okay? So here is a great example, right? So as I've mentioned, you always want to go from swing low to swing low, or if you're finding bearish divergences, swing high to swing high. Okay, so here is a swing low to a swing low and then a move, right? And if we draw a trend line from the bottom here to the bottom here, we can very clearly see that price is moving to the downside. Now, if we look at the RSI indicator, you can see we have a low here, but a much higher low here. This is bullish divergence, right? So this would be letting us know that it's very possible that we could be getting a move to the upside. Okay, so the idea for finding bullish divergences, you're looking for trend reversals or recoveries from a pullback, meaning the price action will be moving to the downside and you're looking for bullish divergence in the RSI to hint towards the possibility of the trend moving to the upside. So in looking at this price action here, you can see that we have a low here. We'll go with this one, okay? So a low here, we'll mark that with a vertical line, and we have a potential low forming here. Now, one thing we notice here is that while price action is moving further to the downside, our RSI is slightly sloping up, okay? And if we draw a trend line from here to here, it's obviously moving more to the downside because this is a lower low. So this is a potential bullish divergence. This lets us know to be paying attention to the possibility of a trend reversal happening. Okay, so bullish divergence, we think the price is going to go up. Let's see what happens. Consolidating, boom. Bullish divergence plays out. Price action moves to the upside. So this is a perfect textbook example of a bullish divergence. Okay, so we saw the bullish divergence potentially forming here, and then we saw the price action moving to the upside, letting us know that this is indeed the low out of the RSI. And when the price started moving to the upside, that confirms the bullish divergence. Now, sometimes you have to be very careful because, say we go back here, and price action didn't break to the upside. Instead, it broke to the downside. the RSI would then likely move further to the downside, invalidating that bullish divergence. All right, so moving on to hidden bullish divergence. Now, hidden bullish divergence is going to be crucial in trying to understand if a trend is going to continue or if it has a likely probability of moving to the downside. So we're looking for a low and then a higher low in price, and then a low and a lower low in the oscillator. So say we are at this consolidation period that we saw with Bitcoin in early December. We got this move to the downside, this little pullback here, and then price moved back up to the upside, a bit more consolidation, and we got another pullback here. So we have our two lows to work with here. So I'm going to mark these with a vertical line. We'll say that's a low there, and that will be our next low there. Now we're looking for a low and a higher low in price, okay, and a low and a lower low in the RSI. Kind of hard to see there with that thing, but you can very clearly see that there is a lower low in the oscillator and a higher low in price. This is textbook hidden bullish divergence, letting us know that the likelihood of this trend continuing to the upside is likely. So let's go ahead and see if this actually plays out. So push play, and are we going up? Are we going up? Are we going up? Boom. There's your hidden bullish divergence playing out as expected. Now, it must be mentioned that these don't always play out the way you expect them to play out. They are just indicating towards the potential probability of trend continuation. So you never want to rely solely on these divergence signals by themselves. You're always looking for confluence with other indicators and other things like support and resistance.